All right. Welcome, Jesse. How are you?
I'm good. Thanks for having me.
No, not a problem. Not a problem. So what was it you just told me?
Well, before we started, I said that my wife and I have become Wrexham fans.
Where's that case? Yeah. What have we got? We got to find something to fix this. Why are you a Wrexham fan?
Well, we didn't have like a football team that we supported. And then we watched the documentary and it humanized these players really. And my wife got pulled into that. And then we like bought a season pass to watch the last season of games.
Hold on. Okay, firstly, they're not a Bitcoin team.
Right.
And our games are free to watch.
Do they stream?
We stream our games. Oh. I was up at 7 o'clock this morning watching us who do we play? Colney Heath. We won 8-1.
Nice. You guys are crushing it.
Dude, we are crushing it. So it was a good day today because there's another team called MK Irish, very good. We played them first game of the season. We beat them. They beat us in the FA Cup. But we'd won the same amount of games this season, but they had lost one, drawn one. No, they'd lost one, but we'd lost one, drawn one. So we dropped points in 2 games. They dropped in 1, but they drew today. So we're back to level, though we've got a better goal difference.
Nice.
And so if we win our games in hand, we'll go top of the league. Right. I can offer you...
There's a large and a small for your wife.
Yeah, should love that.
I can offer you a large away Real Bedford jersey.
Fantastic.
This is yours. Is your your wife small?
Yes, she is.
Wow. This is the last one of these hoodies I have. I actually have to get... There's no more in the bag.
No, there's no more.
I don't think I've got any more in Bedford. I've got to get these printed. They're so popular.
Well, wow. Limited edition. Last of its kind, huh?
Yeah.
What an honor. Thank you.
So who is it you support?
Well, now I support Bedford.
So it's funny watching that. I think that program's brilliant. It's been really good to watch. And I actually preferred it when they were non-league because it helps people understand about non-league football.
Brutal to get into that last cutoff into the league.
It's the hardest. I think it's the hardest division to get out of. I mean, if you've got infinite money, it isn't. The hardest one's the Championship. But all things being equal, I say the hardest one is National League into League 2.
Yeah, they lost in the playoffs. What was that, 2 years ago?
Yeah, it wasn't the final, it was the semi-final.
Oh,
yeah, that's right. Yeah.
And did they nearly screw up this year? I mean, it was close between them and Notts County.
Back and forth. And then
Notts County missed a penalty when they played
with
them.
Ben Foster coming out of retirement to be the goalie for Wrexham. So
well, so it's interesting to watch because obviously I'm trying to do the same thing.
Yep.
With a much smaller team.
But a bigger tailwind over time.
Hopefully, but also, like, I'm literally doing it. I'm going to the games. Sometimes I'm the gate taking the money. I help me and Danny do the program. I'm pulling beers at halftime.
That's awesome.
I'm not just going on Zoom every couple of weeks. Actually, I think Rob McElvenney does a bit more than...
Yeah, he's impressive.
Yeah. I like how he went and learned Welsh, but yeah.
Did he?
Yeah, he's probably
Most
Welsh
people can't speak Welsh.
It's but it's really good because there's a really good thing happening in America with soccer right now in that you've got this kind of trifecta of Wrexham, Ted Lasso, and Lionel Messi.
Yep.
So I think it first started with Ted Lasso. Everyone was like, "Oh, this is funny," and they kind of humanized our game and helped people understand it. And then, having Deadpool come in and buy a football team kind of showed real British football, not the Premier League, real English football. And then Lionel Messi has just been killing it and just scoring amazing goals. So I feel like there's been this massive growth in football here in the US.
Yeah. And I love how I think Messi's doing it because of what Beckham did, right? Like he's got the same option to buy an expansion team in the future.
Yeah. It's just great for us. But we do really well. I mean, just at the conference, we sold pretty much all the merch we brought. I could have brought another 20, 30 jerseys and we'd have sold them. And everywhere you look, there's people in Real Bedford jerseys or hoodies or scarves. And so we've got this density of support here.
It's awesome. And yeah, like that you are the Bitcoin team. You've positioned it as the Bitcoin team. And so long as Bitcoin keeps growing, like that brand that you've established will keep blossoming, which is pretty awesome.
Well, I am also aware of that and working to build out a sustainability outside of Bitcoin, just because you never know what will happen. But Yeah, no. So, were you into football before?
No, so I grew up here in LA, and it was college football. That was it. We didn't even have an NFL team when I was growing up. So I'm a college football fan, like American college football.
Yeah.
And so this has kind of been a new thing for me. We just stumbled into it because of that documentary.
And so now you're watching games.
Yeah, well, right now college football is going, so it's all about college football. But
But have you watched any like full live games?
like gone to
No, watch on the street.
Yeah. Like we would wake up, Saturday morning early and watch the game in the evening and in Wrexham, and that in the spring we'll get right back into it once college football is over.
Wow, and do you fully understand the rules?
Yeah. I mean, so growing up as a millennial in America, the only soccer that existed was the World Cup, right?
Yeah.
So like you knew enough to be excited about the World Cup, and I believe that we will win, and all that would happen, and then we'd get knocked out really early, and then you'd stick around to watch Germany win, and so you knew enough about what was going on to like appreciate the beauty of the game, but it was always this exotic thing like the Olympics. It comes once every 4 years. Now I have the halving that has replaced all of that as my once every 4 years thing I'm looking forward to.
But Wrexham's a very different football. Like it's lower league football.
Yeah.
It's proper grassroots.
Right. And that's what's so cool about that documentary is it showcases how these guys are they're like painters, or like working blue collar jobs, just trying to provide for their families. And, some of them are immigrants and just trying to get a foothold in society in order to build a better life. And like that you start to root for these people.
Yeah.
And so I think that was the magic of that documentary for, why it pulled us in.
And non-league football itself is, I know they've got promoted into the league now, but it is just really exciting. I find lower league football more exciting than the Premier League. I find the Premier League more impressive. The style of football, the quality of the football is impressive, but there's a real excitement, especially in the playoffs. So, I mean, you maybe saw Wrexham in the playoffs previously. Do you understand? You understand the playoffs, right?
Yeah.
I mean, you come in the end. It comes down to one game for promotion.
Wild.
Yeah.
And the whole system makes so much more sense, and they do a good job of pointing out like that's what they got excited about. It was like taking a team and taking them up a few tiers. And we just don't have that in the States. And as a result of that, you have like perennial stinkers in all of our professional sporting leagues. And it's kind of too bad that we don't have a system where like
a capitalist system.
Yeah, exactly.
You have a socialist sports system. But the barrier to entry is huge. You have to be a billionaire, really, to get a sports franchise. Whereas I can buy a team in the 10th tier for like next to nothing. And, if I get my business plan right and I grow the team, there's a path to the Premier League, which is wild.
Yeah, incredible.
Well, we'll have to get you over.
At some point, that'll happen, yeah.
Well, if you come over, I will do both for you. I'll take you to a Real Bedford game and a Wrexham game. I'll arrange both.
That'd be amazing. I would love that.
I want to go and see Wrexham. I think the thing is, I don't know about you, but I think Wrexham will eventually be in the Premier League in the next 10 years.
Do you think?
Yeah.
It depends how long they stay interested in the project, I think.
Yeah.
It has emotional hooks in both of them now. Like I think for Rob McElhenney, it's growing up in Philadelphia, like working class, like he sees himself in these people and it's like family for him.
Yeah, I would take a decade bet if you want it.
I'm not going to take that.
You think they might do as well?
No, but I don't know how to value sats in a decade.
That's right, it's a good bet. Anyway, man, good to see you. We haven't actually talked about football a lot recently in this trip.
No, we're not.
It's all been we've all been talking about Lebanon and Argentina and not really football. I think on our last trip we talked about football relentlessly because we just won a league. So that's all I was talking about. But good to see you, man. It's been a long time coming.
Yeah. It's great to be on the show. This is my first time. I'm honored to be here.
Well, as you know, I love your Twitter. I think your takes are very good. Your analysis is very good. But it's interesting because we're going to really be talking about value in Bitcoin. And the last person we discussed value in Bitcoin with was Peter Dunworth. And he was like, what was he? 800 trillion a coin? Or
7 billion was his bearish case.
Yeah, 7 billion was his bearish case. And you come out to a different conclusion. So
yes.
I think we're going to work through that. It was funny because when we prepare for interviews, we're like, what should we talk about? we'll go through, some of their Twitter, we'll come up with some things. But you wrote this brilliant article, but you also put all the questions in there. So if you look here, we've just taken all your questions out of your article. But we will share the article in the show notes. People have it. But tell me why you worked on this article, and it's probably a little bit connected to your work and your company Onramp.
Yeah. Probably worth a minute of background here. So before falling into Bitcoin, I was a management consultant. I worked at Bain & Company. And what you do there is you come in, businesses hire Bain to solve problems, and you bring an analytical toolkit to figuring out like what's the size of a market, if this company should enter a market or not, or any kind of question like that. So it's all about entering an ambiguous situation and trying to triangulate answers by gathering data and firming up through a sample set what is reality here and what makes sense, and coming up with sensible analysis to guide your decisions. So then coming into Bitcoin, I brought that same sort of background and tendencies. And for me, in management consulting, a major exercise is what's the full potential of X, And for me, that quickly became what's the full potential of Bitcoin? What is this thing? Okay, it's digital gold. It's a digital store of value. Where's the ceiling? What's the full potential valuation of this asset? And that's a straightforward exercise, but there's a lot of missing pieces along the way in terms of you have to plug in what's the total addressable market, and then you have to to plug that in, you have to figure out what is the total addressable market and what are the pieces that go into that. So I spent some time cobbling together the pieces necessary to come up with my full potential valuation for Bitcoin, by starting with figuring out what is how much value is out there. So what's the total global asset landscape? And my triangulating and pulling in various data sources came up with 900 trillion. There's $900 trillion of value out there in the world in various store of value buckets. And that includes gold, but it also includes perfect.
So explain this to anyone who's listening and watching YouTube.
Yeah. So there's a bunch of different buckets here. These are your different store of value categories. You've got real estate, you've got equities, you've got bonds. You also have these smaller categories like gold, art, collectibles, and of course you have money itself. So how much money is there? There's $120 trillion of money out there, and then you've got this tiny little thimble of a bucket that's Bitcoin. It's now actually about 500 billion. But so 500 billion out of $900 trillion asset landscape, that's 1/2000th of the world's value is currently Bitcoin. And all of these different categories have evolved over time to be in equilibrium because of their respective properties. Real estate is hard to make more of, right? So we've stored a lot of value in real estate because it's a good store of value asset. These all shift over time. And Bitcoin in particular has this inherent mechanic of increasing scarcity built into it that throws off the scarcity balance that's in this picture over time. Because Bitcoin gets more scarce, it will, in theory, attract more value into it because in 6 months, it becomes as good of a store of value as gold, which is currently a $12 trillion bucket. Specifically because the current inflation rate actually becomes a better store of value than gold. The current inflation rate, the amount of gold mined every year is 1.5% to 2% every year for the last century. Bitcoin right now is 1.8% issuance per year. And in 6 months, when the halving happens, that drops in half to 0.9% issuance. And in that moment, it becomes a better store of value. It gets debased, it gets diluted at a lesser rate than gold.
But can you really only say it's measure its utility as a store of value only based on that one factor.
Great point. No, this is one element that I think is actually undervalued.
Okay.
And part of that perspective is informed by Saifedean and the Bitcoin Standard, where he really makes the case for why gold emerged as like the store of value in the physical world. Up until 100 years ago, really, up until the advent of central banking in 1913, and since then everything has gotten a little wonky, right?
Yeah.
But the gold emerged as the winner because it's harder to make more gold than it is any other commodity. It's easier to make everything else except gold. You have to mine it. It's very hard to find and mine. And so I think that is the driving tailwind behind Bitcoin's value appreciation over time, among its many other attractive properties. I think that's kind of like the heart of it. Anyway, we can skip forward to the other graph of chart. So then, from a exercise point of view, if you believe that, if you understand that Bitcoin is going to become more scarce, it has this increasing scarcity, it becomes a more attractive store of value in the digital age. It becomes, the Lindy effect of it being more proven out continues. People get comfortable with it. They stop believing that it's monopoly money. They start realizing that there's substance here. It starts to attract value from people who are holding value in these other buckets. So, like today, $300 trillion is sitting in bonds, which has lost a tremendous amount of value over the last 2 years because of the sovereign debt crisis that we're facing. Like the amount of debt in the world and the deficits that governments are running, particularly the US, necessitate that we are going to have to print more and more and more, and inflation is going to be a problem. We have to inflate away the value of those bonds, which means that they necessarily will be a negative real return asset class over the coming decades.
So interestingly, people who are buying bonds now and thinking, oh, great, I'm getting this return. We've talked about people saying, oh, well, I might as well just park my money in bonds because I'm getting 5, 6, 7% return, whatever. I don't know what the returns are. They've really been gaslit because actually you're losing value because of the inflation rate.
Absolutely. In my opinion, yes. It's funny because it's so much better than it was, right? Like they are getting 5, 6% returns now, 5%. But what's hidden there is that inflation risk of like, over the next decade, what are we going to average in terms of actual monetary base expansion? It's going to be something like 7, 10%, in which case the delta there is what you're losing in real terms every year.
I think there's a way of quantifying it though that people think about. They're like, well, I know I'm going to get that 5%. I'm getting more dollars. And I think some people aren't doing that computation in their head. It's just, I'm getting more dollars.
Right.
And whereas with something like Bitcoin, they're like, well, it might go up or it might go down. Or if it stays the same, I'm missing out on my yield. But they can't, it's not an easy comparable.
Bitcoin feels risky.
Yeah.
And in fact, bonds are the risky thing, in my view, because of this problem. You get the guaranteed nominal return, but this massive hidden risk. And on the flip side with Bitcoin, it's volatile. The price is all over the place, but it has guaranteed increasing scarcity built into it. So if you're looking at it at a 4+ year timeline, there's reason to believe that Bitcoin is the lower risk asset than bonds. And I think that capital will wake up to that and start to migrate towards Bitcoin away from bonds and other asset classes.
And some of that will come down to timing and how much migrates to it. I think there's always a risk of too much migrates too quickly. Yeah. Then the price appreciates too much and the people buy at the wrong time. Then there's that redistribution effect. We just talked about this with Pierre Rochard. Essentially, when people make a lot of money in Bitcoin and there's a bull market, then there's a redistribution which leads to a bear market because people are like, oh, I made loads of money. I'll buy a car or a house or pay my parents' mortgage off. So I think we talked about this necessity for Bitcoin's adoption to be not too fast.
Yep.
So I don't think this can't all happen at once.
No, certainly not. And my view is that what we've seen, the series of bubbles every 4 years continues. We have a bull market, a bear market, a bull market that turns into a bubble.
Yeah.
People get too excited, they overextend. We get higher than we should be, and that necessitates a crash, and it's very painful, and it resets, but the base is higher, right? So we have that higher low every 4 years through time, and it's the bubbles in a funny way that are kind of the feedback mechanism to keep things on a steady path, because it wipes out the excessive enthusiasm every 4 years because of the crash, and the fundamentals underneath are what continue to rise.
One of the other interesting things in this is when you've put real estate, because I've always thought, why would I buy Bitcoin instead of real estate? And I think real estate is still a good investment, but I also want to own a home. But then I actually realized what I'd done when I bought my last house. I actually got the longest mortgage with the highest amount of borrowing I could possibly get, because I wanted to own the house, but I wanted to retain as much Bitcoin as possible, because every pound I put into my mortgage could have been held in Bitcoin. So even by owning a house, I was still diverting investment funds into Bitcoin from real estate.
Into real estate, yeah.
No, away from real estate into Bitcoin, because I got the biggest mortgage. I borrowed as much money as I could over the longest time frame, because I wanted to keep as many pounds in Bitcoin. Yeah. So even though I bought property, I was still diversifying investment into Bitcoin on that trade.
Yeah, you were maintaining as much as you could and if what I was just saying about bonds necessarily delivering a negative real return over the next coming decades is true, that's true of mortgage rates too. That the bank ends up the loser on that trade, which is rare. But whatever the real monetary base expansion is, and in terms of percentage, it's 7% or whatever. And let's say you got a mortgage for 5%, then you're winning on that trade.
Yeah. So when we run through this, because it is a model, this is your model,
right?
But you've attributed a percentage of Bitcoin capture from each one. How did you come to those?
So this is kind of the end of this exercise where, I'm fully aware that these are based only in my imagination, really.
Yeah.
Of this is what feels possible in terms of, what percentage of bonds do I think can easily migrate from bonds to Bitcoin? In reality, it's quite possible it's 90%, but that sounds crazy. So let's take a more measured approach here and be a little more conservative and call it 30%. So what is that? If 30% of the value that sits in bonds today over the next several decades, we're talking 20, 30 years here, if people realize that Bitcoin, because of its increasing scarcity that's guaranteed in the protocol, delivers a positive return every 4 years, which is really kind of the function of bonds in people's portfolios, a guaranteed nominal yield, what percent will migrate from bonds into Bitcoin? And I encourage everybody to run your own numbers here, like slot in what you think are appropriate. We've got the starting numbers for the total addressable market for each category, and see what you think is reasonable for Bitcoin to take from each of these buckets.
So the interesting point of that is not that you're saying Bitcoin is going to have a ceiling at this price. You're saying there is there's like a wide spectrum in this model. There's a wide amount of options, but it's more of a guide that a massive appreciation is possible if Bitcoin starts to capture parts of these markets. So
exactly.
you could have a bearish version of this, but even a bearish version is going to see a price appreciation.
Exactly. And ultimately, you could have zeros for all of these. And if you decide that bonds may not make sense going forward and that Bitcoin could take 10% of the bond market, that's a $30 trillion inflow, which would mean Bitcoin at 1.5 million per coin, assuming there's no multiplier there. And I think that is one of the things that people get caught up with. I don't think the multiplier of capital inflows to Bitcoin and how that, each dollar flowing into Bitcoin impacts the price of the total valuation of Bitcoin by 2 to 100x, depending on who you're talking to. But I think that's in a bull market. I think that over time works itself out. So that's one thing that I think when you hear the extremely large potential valuation calculations from people, they're often assuming that the inflow multiplier for every dollar coming into Bitcoin is like 100x
because of lack of supply.
because of the price being set at the marginal trade of Bitcoin. Like if somebody buys one Bitcoin and causes the market price of Bitcoin to go up $1 because of that one exchange, the total valuation of all the Bitcoin in the world goes up $21 million because of how you're multiplying that. And there have been some pieces of analysis to try to figure out what's the net of that. And various people have come up with anywhere from 2 to 100 being Bank of America, I believe. But that was like at the peak of a bull market. So that when they happened to do that analysis, that they came up with a crazy number. And I think that the bear markets wash all that out and kind of level set it. And, I guess kind of getting towards the some of the other even higher valuation numbers you've heard recently. I think it's important to remain grounded in like the total global asset landscape in terms of Bitcoin isn't going to grow the wealth of the world. It's really just a unit for commanding the resources that exist in the world, whether that's real estate or oil or purchasing equity in a company. But this unit of account represents a piece of the resources in the world. It doesn't grow the total wealth of the world just because, if we were to have a $3 billion Bitcoin or whatever like that, you're talking about like a 300x to the wealth in the world. And that's just not going to happen. You have to be grounded in the confines of what's possible in terms of Bitcoin being a unit of account for representing who has claim or who has the purchasing power to command resources that exist already.
That valuation is weird anyway, because even if it was 300 billion or whatever the numbers are, not everybody, or say there's a really high price for Bitcoin itself, say it's 10 million, not everybody can suddenly sell their Bitcoin for 10 million. That will reduce the price down. But interestingly and conversely, people would be able to leverage it at those prices. And so people leveraging their Bitcoin for sovereign currencies, it's in some ways better for Bitcoin.
Yes. And it goes back to the other chart we had up here before of like there's $120 trillion of money, but there's $900 trillion of asset value. And that's often like, you have $1 million home, but it's not dollars, you have the property, right? And you can leverage that property to take out a loan to get dollars, but it's all within this ecosystem. And so I think that the right end state mental model for Bitcoin, assuming it takes over the world of money, is for it to sort of replace money here. Like it becomes the money piece. The question is, what percentage of the graph does that become? Because it's unattractive to hold fiat dollars because of inflation. It's attractive to hold Bitcoin because of increasing scarcity. And so, if we've started to store too much value in these various buckets because the money is not a good money, we've monetized these other assets. They've become money. Our real estate has become money for our savings accounts. That's how we approach life now. Is our 401k and our real estate holdings are our savings, but those are monetary premiums that are stored in those buckets start to shift back to a good money. So that's kind of the core supposition of this exercise is that Bitcoin replaces the money piece, and then the question is how much of this total chart does that grow to become?
I think also the use of the word ceiling threw me for a couple of reasons. Firstly, you've set a $10 million ceiling based on that, but actually, once you've hit those capture of those different asset classes, There's every chance it continues.
Yes. Yeah, and then the 30% in bonds part, it could be 90%. It could be more than, that quote unquote ceiling that I set is 25% of the world's value is what I think is reasonable, achievable for Bitcoin in 30 years, something like that time frame.
But there is a consideration for something else that affects the scarcity and the value of Bitcoin. Danny, follow my train of thought here and tell me if I've got this right. So we met the other day with David Marcus from Lightspark, and Lightspark provides liquidity within the Lightning Network. But to do so, they have to essentially build up a treasury of Bitcoin to be able to provide that liquidity. And so they're increasing the scarcity with the usage of Bitcoin as a medium of exchange. And so part of the Bitcoin network will be, or the amount of Bitcoin there is within the network is being captured for utility purposes outside of store of value.
It's the industrial use of Bitcoin.
The industrial use of Bitcoin. So that your model doesn't even consider other users.
True. It doesn't. I think that would be kind of, I think this model is sort of the umbrella of like money, like all purposes of money, and that money today, fiat money, is such a small piece because you can do fractional reserve banking. You can do all these things where you don't have to have dollars on hand. Our banking system is set up in a way that you can. It's very forgiving for financial institutions because somebody can always print more of it.
Yeah.
Right.
But I don't think the ceiling really is a ceiling.
Yes.
Because otherwise, if it is a ceiling, it's like, we're at 9.8 million. There's not much room to go here now. I'm going to liquidate some of my Bitcoin and move into other assets.
Yeah. Ultimately, the ceiling is a question of what percentage of value do people end up wanting to have in Bitcoin versus every other asset category. The ceiling is not set by, like with gold, the market has to absorb 2% more gold being created every year. So that's supply selling pressure that has to be absorbed by the market. And that ends up setting the ceiling for gold.
So in writing this, have you made yourself more bullish?
Yeah. In going through this exercise, at first I was embarrassed to even show my work. Like, this sounds crazy. And I get that. $10 million per Bitcoin is what this resulted in. And I think it's kind of conservative in its estimates. And that's crazy.
I mean, Peter Dunworth would disagree.
He thinks you're bearish. What kind of time frames are you looking at?
Yeah, this is full potential. So this is talking about full societal adoption of Bitcoin. So that would mean like 2/3 of the way or more through the bell curve of adopters. And right now we're at 0.5% into the bell curve of adopters.
Oh, so we're a long way off.
Oh yeah, and so this would and
is this for my kids? Yeah,
like this is probably a 30-year plus sort of this requires fiat currencies to have failed and the world to have figured out that Bitcoin is the solution and that they've all adopted it. Like, that's what we're talking about.
But
here.
This is based on current values of the market,
yes.
Because if currencies fail, then that 10 million might not even buy you a car.
And that is very important, that all of these numbers are in today's dollars.
Yeah.
And the value of a dollar will shift dramatically. And in that sense, you could end up with $3 billion per Bitcoin because a dollar is not worth anything anymore.
Yeah. I think the pace could be faster than you think. I think it could be. Yeah. And I mean, Arthur Hayes just came out this week and thinks, where is it now? 2027?
I didn't see this.
He thinks Bitcoin will be between 750,000 and 1 million.
Yeah.
So if currencies start to fail fast,
yeah,
Bitcoin's legitimacy grows, and there are multiple ways to access Bitcoin, not just spot buying from exchange, but also maybe like ETFs. There is a chance that you can bring the timescale for this forward.
Yeah, it is a question of, is it gradually then suddenly? I'm sort of in the camp of it's gradually but exponentially, which doesn't mean that there's any like specific moment where it's a light switch for people, but exponential curves are powerful, so that's good enough.
Then it leads to the question: do we have enough Bitcoin? I stole that right out of your article. Does that make you then question? Do you have enough Bitcoin? Are you like,
certainly.
Oh shit.
Well, it causes a bunch of thoughts and implications out of this. Is like, if this is right, first of all, the people who are able to retire in the future are the ones who adopt Bitcoin as part of their savings strategy sooner than later. Like that could become more than just retirement. That could become the defining question about how well off financially you and your family are. Is like,
Generational wealth.
are you in generational wealth? Are you wealthy? Are you able to retire? Or are you a Luddite, a laggard who doesn't take advantage of Bitcoin savings until everybody's adopted it, and it doesn't do you any good in terms of bolstering your finances long term?
Yeah, I've long considered Bitcoin my pension plan ever since I had I think I was just after my divorce. I was about 35, and I had a meeting with a pensions advisor because I had a very small pension from my company. And when I got divorced, I had like, I don't know, 50 grand in it, 100 grand, whatever the number was. And I had to halve it because half went to my ex-wife. And so at the time I was like, well, I've got like sod all in my pension. And I went to a pension advisor and they said, what amount of money do you want every year to live on tax-free? And I was like, I mean, 40 grand feels like a good number. £40,000. I can have a holiday and do my shopping. I can live a nice, comfortable life with that. And he came back to me and said, okay, well, you need a pension pot of 2.2 million. I was like, huh? What? He said, yeah. So, and you'll need that by the time you're, when do you want to retire? I was like, well, 60, maybe 55. And he's like, well, that's going to pull that forward to you. And I was like, there's no scenario I saved 2.2 million. I don't think there was a scenario where I saved 2.2 million from the age of 18, let alone at 35, wanting to retire in 20 years. I mean, you're talking about saving, what is that? 2.2 million over 20 years? What's that? 110,000?
Yeah.
Yeah.
Yeah. Dead on.
110,000 a year. Okay. I didn't earn that at the point I had the meeting a year, let alone taxation. So I could never hit that pension point. So I was like, okay, well, I'm essentially not going to retire, or I'm going to retire with a lot less money, with maybe a little cafe or something. And then I came to the realization that actually, no, Bitcoin can be my pension pot.
Yeah.
Because what it does is not only can I save a certain amount, but every 4 years, hopefully it does something which accelerates my pension. And I think a lot of people are thinking, it's almost like as Social Security becomes this unfunded liability, which we know is going to fail, that there's this redistribution to Bitcoiners who have actually planned in a different way.
Yeah, it's being contrarian and going against the grain right now, and having people think that you're an idiot because of it. That, I think that's the difference, because all of the advice we have about 401ks, pensions is rooted in the last 40 years of what worked in investing. And what worked in investing was a 60-40 portfolio, specifically because interest rates in 1981 were 15%, and they got marched down to zero. And financial asset valuations skyrocket when interest rates move down. So everybody was a genius for piling their 401k into equities and bonds over the last 40 years. And so that's what we've been told to do, and real estate. That's what we've been told to do because it worked for the last 40 years. But that tide has already started turning because interest rates can't be zero forever. And in fact, because of the amount of deficits that we've started to pile up, the U.S. hasn't balanced its budget in 22 years. We ran a $2 trillion deficit last year. We're actually on track right now for like a $6 trillion deficit if you annualize the amount that we've been adding.
Which is more than 100% of GDP for that year. Because GDP isn't it? Oh, well, sorry, not GDP, tax receipts, sorry.
Yes.
Tax receipts are what, 3.4 trillion for the US?
Something like that. Yeah, obviously it varies a lot with capital gains or not. And GDP is like 20 or 30. But we're running larger and larger deficits, and now the interest expense on national debt is starting to come into effect, where it had been interest expense on 0% or so interest rates for $30 trillion of national debt. Now suddenly it's on 5% interest rates for $33 trillion of debt. So you're talking about running a $1.6 trillion of interest expense that didn't exist a few years ago. That's twice the annual spending on the military for the U.S.
And how will they pay that interest?
Literally by printing more money.
And so what will that do?
Exactly.
This is the Ponzi mechanics playing out, or we go through massive. James Lavish talked to us about this. He said most likely the best scenario would be run 2 to 3 years of essentially hyperinflation to wipe out the debt.
Yep.
But that will wipe out the future of anyone who's got any savings in dollars, and it wiped those Social Security.
Yep, and it wipes out bonds.
It wipes everything out.
Yeah.
Pretty much. I mean, maybe not real estate, and maybe not Bitcoin.
There are some assets that have some like scarcity where they would rebalance it in the future state, like real estate. But you've mortally wounded the economy at that point. So then your real estate would suffer anyway.
It's tricky trying to explain this stuff to people. It's tricky trying to get this across to people, because I think there's been this realization over the last year of what money is. When simple signals where fuel's got very expensive, or power's got very expensive energy costs, or going to the supermarket, you suddenly like, I can't get much for my money now. What happened? It's that realization that people have had, but it's almost like they're at the water, but they're not drinking. So I talked about this with my friends, and I'm like, okay, well, this is why I buy Bitcoin. It's like, yeah, but I'm not going to buy Bitcoin. I still can't get them over that hurdle. And it's a real tricky one. I mean, I guess explain what your company does, or Onramp does, so people know.
Yeah, so Onramp is a company I co-founded about a year ago with Michael Tanguma.
Love Michael.
Yeah. He says hi, by the way.
Okay, good.
So Onramp is focused on, it's a Bitcoin asset management platform built on multi-institution custody. And so the core there is multi-institution custody. When we're talking about how there's a ton of capital that will be flowing into Bitcoin, I think, over the coming decades, how does it do that? How does it access Bitcoin in a safe way? There's the ETFs that will be coming, but what you're doing with an ETF is you're trusting counterparties, right? You're trusting BlackRock, who is licensing, how they're storing the Bitcoin assets to Coinbase. So you've got two single points of failure in how you're accessing Bitcoin if you go through an ETF. To date, the best way to do it, Bitcoin custody, has been self-custody, like not your keys, not your coins, and that's the only way to eliminate counterparty risk so far to date in how the Bitcoin ecosystem has evolved. But with multi-institution custody, which Onramp has really kind of pioneered at the forefront of building out, it is possible to get rid of counterparty risk without having to hold your own keys. And that is kind of a radical and new development in the Bitcoin custody landscape. So the idea there is that using multi-sig, so you've got 3 keys, let's say, use the scenario of a 2 of 3 multi-sig vault. You got 3 keys controlling a vault where the Bitcoin sits. And, with collaborative custody, the way that works is, with some of the existing collaborative custody solutions, that's done by you hold 1 or 2 of the keys, and then a company holds 1 key for you, and you collaborate. But ultimately, you're in control of that. You have to maintain the setup and then maintain the storage of your keys. And that's scary. That's a little hard. It's daunting. It's scary, particularly to certain investors. Like, there's a whole cohort of investors out there who are very intimidated by cryptographic keys. Like, that is a scary concept. And so I've been running a crypto investment fund for 5 years, and it started as an altcoin fund. I got rocked in 2018, and it forced me to figure out that Bitcoin was the only thing worth holding. And then that led to me realizing, you know what, investors, you guys should just be holding Bitcoin. That's all you should be holding. And you don't need me to do that in a fund. You can take self-custody, and you should. And a quarter of them did, and 3/4 of them are like, I don't want to do that. Like, I want you to have to do that and take care of it for me because that's scary. So, those are the types of investors that currently find the prospect of getting into Bitcoin daunting, scary. Like, custody is a non-starter. But with multi-institution custody, the way it's set up is, instead of it being like collaborative custody where you have to participate in it, it's 3 different institutions, each holding a key and coordinated and acting at the direction of the end client. So it's more of a traditional model in terms of who has the agency, who has control. It's the end client. And each of the key holding institutions cannot unilaterally control the Bitcoin in the vault. So the only way that Bitcoin in the vault can move is if the client initiates that with 2 of the existing key holders.
So how does that functionally work? So say I'm set up, I want to move 10 Bitcoin out into a hardware wallet, or for a mortgage on a house, whatever it is. How do I? What's the actual steps, the functional steps that I do
as a customer? As a client.
as a user of
that. So you have to go through somebody like OnRamp in order to.
No, I don't mean that. So you've set up. Set up. I literally want to go. So at the moment, I've got a multi-sig.
Yep.
Yeah. If I'm using Unchained, I go and create the transaction. I then have to plug in my hardware wallet, sign it, and then I have to get somebody else or go to another location and sign it, and then it happens. But if the institutions hold the keys, how do I sign the transaction? Yeah.
So it's as if, like, if you had a account at Coinbase, right, and you wanted to send your Bitcoin from your Coinbase account to anywhere. Coinbase has its certain set of authentication steps that you have to go through to log into your account and then authorize that transaction. And that's what that institution has set up for, their verification steps. It's effectively that for each of the institutions that's a key holder, you have to go through the full authentication steps that you have pre-designated, set up as part of your original setup of this arrangement with each of those institutions, all coordinated by the company that's created the multi-institution custody setup, in our case, OnRamp. So you have a set of procedures that are necessary for OnRamp to sign their transaction, our transaction on your behalf. And then we've partnered with BitGo as our infrastructure provider, and they've been fantastic. Mike Belshi, the founder and CEO of BitGo, has been great and a big supporter of this concept. He invented multi-sig, so he may be onto something when he talks about multi-sig. So an OnRamp client has to also set up with BitGo and establish their whole authentication verification procedures. So to sign a transaction, they have to verify with OnRamp and then verify with BitGo using BitGo's set of client norms in terms of verification. And then BitGo signs that transaction. So now you've got 2 signatures, one from OnRamp, one from BitGo, and that's sufficient to move the assets.
What stops the $5 wrench attack in that scenario?
Well, the $5 wrench attack, let's say you very effectively manage to infiltrate one of those institutions, right?
No, it's for me. Someone comes to my house, knocks on the door.
Oh,
they know
I see.
I've got multi-institution. They're like, create the transaction, log in, send, log in, send.
Yeah.
I mean, at the moment, the way my multi-sig is set up is that it's multi-people in multiple locations.
Yep.
And so that's what prevents the $5 wrench attack right now. But I do recognize the need for other solutions like this. So, you could get to a point where in 5 cycles, and maybe even I'm dead and my kids are after me, that the small amount of Bitcoin I have now is worth a small fortune. It could be,
You're right.
multiple tens of millions.
Yeah.
I wouldn't want them in that. I would be worried about them in that scenario having an unchained vault, just because if they made a mistake. The multi-institution feels a little bit more protective, but I don't know how that stops the $5 range.
Right. And no custody solution is perfect.
Yeah.
When you're setting up your account, you can set up certain stipulations, right? Of like, I want this to move very slowly. As a default, OnRamp is set up to, you're moving glaciers when you're moving assets out of this.
It doesn't go for a week.
Doesn't go for X amount of time. Also, as part of this, you have to do video verification for both OnRamp and for BitGo.
AI is going to destroy that very quickly.
Well, then we will adapt to whatever is the best in class for authenticating. So in that sense, like, it's not perfect. It's better than existing solutions because you have multiple counterparties. Does it fully solve for every edge case out there? That's impossible. But can you set it up in a way that makes it makes it harder to engineer an attack than any existing custody solution? Yes. And can you also get the benefits of having like a institutional relationship where you are no longer responsible for like keeping track of that hardware wallet that you might have misplaced or accidentally threw away the backup phrase or whatever it is, that the user error that happens with self-custody. So we're excited, confident that this comes out of the OnRamp team's learnings over working in the Bitcoin industry for the last half dozen years. All of us together have seen this problem from different angles. Me running a fund, Michael Tanguma working at Unchained, helping grow that business and onboarding billions of dollars worth of client assets into multi-sig. So, what were the sticking points that he encountered? People are intimidated by having to keep safe a cryptographic secret and maintain perfect security forever. At no point in time can you ever allow that thing to see a video camera, right? Like, that's what we were talking about, and that's why it's scary to frankly, to older folks, to boomers who, didn't grow up in a digital native world and have the self-awareness to realize that, I don't know that I have the competence to take this on. And I think that's like a common sort of reaction that we get with people who have money, who are looking to, diversify their portfolio into Bitcoin to try to hedge against inflation. But where do you go? Do you leave it on Coinbase? Do you go into an ETF and suddenly you're trusting BlackRock and whoever their affiliates are? But this solution solves for a lot of those problems. Nothing is perfect, but we have created something that we're confident in, and I think the excitement from BitGo and also Kingdom Trust, who is another partner for us, and CoinCover. Another business whose business is keeping keys in a multi-sig arrangement safe. Like that, this is what these businesses have been doing for some time. Kingdom Trust is a qualified custodian in the traditional asset space. It's their business, and so we've shifted with this solution. We've shifted self-custody into multi-institution. Like you have offloaded some of the responsibility that comes with self-custody to institutions whose business is this and whose competence is this. And it's not going to be perfect for everyone. But I think that when we're talking about like the amount of capital that's flowing into Bitcoin over the coming decades, I think the multi-institution custody standard will be the right fit for like 80% of capital coming in. For 20%, you're going to want self-custody, or you feel confident enough that self-custody is right for you. Great. If that's the case, you should do that. Like that's a fantastic solution. All of us at OnRamp have done that. We use self-custody. and also now multi-institution custody, because it's a fantastic solution.
I think it's the kind of solution my dad would use. My dad's never going to manage multiple hardware wallets and distribute them, and he wouldn't even know what to do. Sorry, Dad, if you're listening, apologies, but you're rubbish at this. But he wouldn't. But some kind of multi-institution would be the kind of thing he would use, probably with me setting it up and him calling me when there's issues. But like, I know that's going to be right for him. But I also, like I say, I think, and I also think people will have like different, like a combination of things. I mean, I already have about 4 or 5 different ways I store Bitcoin, from mobile to have a single hardware wallet, which I have a very small amount on. I then have different, I have Casa for one thing, Unchained for another. Deep cold storage, where there's like a very lengthy process that takes days and journeys, and one solution requires a flight. Like, so I've got everyone, but I could also see, like, say, if I, hopefully I'll live for a lot longer, but say I live to 75. Mm-hmm. It's only 30 years, but that's, what's that? 7.5 cycles, Bitcoin cycles. I mean, but who knows what the price of
we might be at that.
Yeah, and if you're at that, then you're talking about leaving a very big lump of money to my children, and I wouldn't want them to have that risk. And so it's almost like you set up like a decentralized bank.
Yes, exactly. And it's the kind of thing that's not possible in the traditional asset space, because Bitcoin has this multi-sig capability.
Yeah.
And that's why this hasn't been done.
Well, and it's a bearer asset.
Yeah. But it's a bearer asset that has this like Schrodinger's cat, like custody capability.
Yeah.
Which is not possible with dollars or anything else out there. And I think this solution solves for one of those big concerns that people have of like, if I get hit by a bus, like how do my kids access my Bitcoin? How does my family know what to do? Like with self-custody, you better hope that they have paid attention when you were explaining, here's the steps that you have to do and the treasure hunt you may or may not have to go on. And that's scary for people. And it's also scary for, large holders out there of, we've had people who, they're very competent, they're very savvy. They've set up self-custody and have maintained it for a number of years.
You're talking about Luke Dasher. It's fine.
I haven't met him, so.
Yeah, but and that's right. I mean, my succession plan for when I die at the moment is I've left different clues with different people who don't know who each other are, but can come together with those clues and try and piece it together. But it's still a ropey scenario,
and that'll probably work, right? That'll probably
work.
But if you're holding 10,000 Bitcoin, and there's that nagging doubt that you have that like,
I wish I had 10,000 Bitcoin.
Me too. But if you are in that position, you've set up self-custody and it's great, right? It's best in class. But you have this nagging doubt that your heirs are not going to be able to access it. But you don't want to like go leave a portion of your funds on Coinbase or anything like that. There really hasn't been another alternative in order to diversify how you're holding your Bitcoin that meets the standard, in my opinion, versus self-custody. And now there's this whole other possibility of multi-institution custody. And
it's like kids, phone Jesse.
Yeah, so it's right. And we've seen interest from folks to like put a piece of their assets in this form of custody so that they have solved for that problem of like, if my 10,000 Bitcoin are somehow inaccessible, well, at least I've carved off a piece that I know is sitting in multi-institution custody, and that flow of who has rights to that in terms of the traditional legal system is clearer, and my heirs will be able to access those funds. I might as well mention, we've talked about custody and how, what the hell does Onramp do as part of that. We have a custody solution that is built on this, as we've been talking about. There's also a Onramp Bitcoin Trust, which is an investment fund designed much like the BlackRock trust proposal, but it's a private placement trust, and it doesn't have some of the gotchas that BlackRock has inserted into their S1 to make it difficult for investors to retain their rights when it comes to their Bitcoin ultimately, which is, in my opinion, kind of a big trap there. So we have an investment fund for folks who are looking for a fund vehicle to have exposure to Bitcoin and have this form of custody. And then finally, a wealth management platform for individuals, private wealth, and also for RIA businesses who are looking for a TAMP. It's an industry term for the portal, the software to manage their clients' assets and have Bitcoin pulled into that environment so that they can have oversight over that portion of clients' portfolios. So kind of a comprehensive Bitcoin asset management platform, which we've been developing for quite some time and has just launched.
Well, that's a good ad, and I don't mind it because I've known Tanguma for a long time, and I like that guy a lot. Well, brilliant. So how do people find out more? Is it OnRamp?
Yeah, onrampbitcoin.com.
Love it.
And if you go
a great
there,
name.
Thank you. Yeah, it came from, it's a bit on the nose, right?
Yeah.
But like the whole point is, how does capital on-ramp to Bitcoin over the coming decade? Like this is, we're a part of that solution and want to provide the best way for people to begin their journey and get all the educational resources they need to learn about Bitcoin, learn about self-custody ultimately. The problem is that people have started with like Coinbase or GBTC, and they get stuck there. But if you start with a Bitcoin-only education-focused starting point, then you can grow into becoming hold your own keys, self-custody, a knowledgeable Bitcoiner. And that's what we want. We just want to help people come into this ecosystem the right way and not fall into like altcoins like you do. If you're on Coinbase and you log in and it says, find out about all the new altcoins that you should be trading, it's not in your best interest. And you shouldn't be there in the first place. So you should be focused on Bitcoin only and learning about the asset itself.
Well, this has been long overdue, and I wish you the best of luck. And I need to see Tanguma because I haven't seen him in ages. But say hello to him from me when you see him.
Will do.
All the best, man. Thank you.
Thank you so much.